Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Artelo Biosciences. What catalyst just skyrocketed this biopharma 100% today? And should we get in on the bandwagon? These are some of the questions I will answer in this video, so let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock reviews and recommendations from an unbiased source. So let's get right into it. So Artelo Biosciences is a biopharmaceutical company. The company is focused on licensing, developing, and commercializing treatments intended to modulate the endocannabinoid system, the ECS. It develops and commercializes ethical pharmaceutical products that provide physicians access to the therapeutic potential of cannabinoid therapeutics and other modulators of the ECS for their patients. Its pipeline of drugs that they're developing include the ART12.11, the ART26.12, and the ART27.13. Now, the company is developing the ART12.11 for targeting the development in inflammatory bowel disease, IBD, stroke, and rare orphan diseases. The ART26.12 is the endocannabinoid transport protein inhibitor for treatment of breast cancer, prostate cancer, and nociceptive pain. ART27.13 is being developed for cancer. The company also intends to develop a formulation suitable for treatment of anorexia and weight loss associated with cancer. It is extremely important to emphasize, though, that Artelo is in the developmental stage company right now. None of the drug candidates are approved in their pipeline, and there is zero revenue right now, and there's zero revenue projected for the end of 2021. Now let's go look at some news of the company that caused all this madness today. So the sole catalyst for this rally has been the only one news article regarding the one analyst that decided to review Artelo, and let's go over that. Landenberg Thalmann initiated coverage of the stock with a buy rating and announced a $7 price target. Now, according to tipranks.com, Higgins is a 5-star analyst with an average return of 21.5% and a 41.5% success rate. So what that just tells me that is he's wrong. He's right 40% of the time, and he's wrong 60% of the time. Not bashing the guy, but just giving you all the facts. Now, Higgins covers the healthcare sector, focusing on stocks such as Zenor Pharmaceuticals, Armata Pharmaceuticals, and Rhythm Pharmaceuticals. Now, let's go over some of the fundamentals of the company. So the company currently has a market capitalization of around $25.6 million, and the current share price right now is hovering around $2.90 a share. It went from $1.60 yesterday all the way up to $3.60 this morning, and it's definitely come back down from its all-time high right now for this trading series. So currently it's unprofitable, and the company is now forecast to be profitable over the next 3 years. The company is not making any revenues. Now, the company's price to book ratio is 4.08. The industry average has the price to book ratio of 5 times. Artelo is debt free. That's a good thing. And Artelo has sufficient cash runway for more than a year based on its current free cash flow. Now, forecasted cash runway. Now, it does have sufficient cash runway for 1.2 years if the free cash flow continues to reduce at the historical rates of 60% per year. Now, I will definitely go into the issues with no revenues and only having a 1.2 year free cash flow in a few minutes because there is no revenue projected over the next 12 months. So let me bring it back here. So based on that one analyst that said it was a buy recommendation, I did find another analyst that said it was a hold recommendation, and both of them had a price target anywhere from $7 to $8 a share over the next year. So, and there are no recent research groups going over Artelo right now, so there wasn't anything I could find on the research reporting on it. Now, the general public, it's important to note that the general public owns a majority of the shares, being around 75% of the total outstanding shares. So on my buy, hold, or sell recommendation on Artelo right now, here are my thoughts. This is a highly risky micro-cap pharmaceutical company with zero revenues right now. In November 2020, Artelo had zero debt and cash worth of about $7.4 million with a cash runway for 19 months back in November. In the last year, its cash burn was about $4.6 million. At first glance, they might not seem concerning, but sensible investors need to look at the following year and a half to consider what's going to happen to the company if it runs out of cash in the short term. This is an early stage business with lots of money going into research and development. So the company will most likely have to raise more money in the future, either by taking on debt or most likely issuing more shares, and that would cause shareholders to suffer massive costly dilution. So now that we have to look at whether any of the drug candidates are likely to get approved and hit the market over the next 12 months, the same time frame. Now, looking at the last quarter report, so let me bring up their quarterly report right here. So during they said specifically, Artelo said in the statement, during the first quarter of fiscal year 2021, we received both the ethics approval and the clinical trials authorization in the United Kingdom for the cancer appetite recovery study for our lead drug candidate, the ART27.13, a high potency GPCRA agonist, stated Gregory Gorgas, Chief Executive Officer of Artelo Biosciences. The CTA was the final regulatory approval required for the initiation of our phase 1 out of 2 trial in cancer patients with anorexia, which is a significant unmet need that has no recommended standard of care according to the 2020 guidelines from the American Society of Clinical Oncology. Now, they expect to announce enrollment within the next coming weeks, and that was back in January. So they currently have enrolled patients, and the initial safety and efficacy data will come out 6 months from that. So we're months away from what this study is actually going to produce. And completion of the full study is going to take about 12 months. So that's their lead drug candidate. And they basically said it's going to take 12 months from January. So we won't know till next January of 2022 what the results are, complete results are from that. So let me bring it back here. So just from that statement alone tells me over the next 12 months, there's particularly zero potential for revenue with any developmental drug that they're currently in development right now. Now, I project based solely on the company's statements alone, their cash runway might not be enough sometime in the future, probably close to the holidays of 2021. They'll have to either take on debt or do another stock offering. So we also have no news on whether or not these drugs will eventually get approved yet. That is a long way away. So based on all of that, my recommendation for long-term growth investors is to stay away from the stock right now and let the hype die down. If you're interested in the long-term play and want to gamble on a highly risky speculative play, wait a few weeks to see when the dust settles. I would put a target price to get in if you want to gamble on this one below the $2 mark, back to where it was at $1.60 a share. The worst case scenario for this company is that the pipeline of drug candidates fails and the company goes under. But the timeline to know that information is well over a year away from now once those drug candidates go through clinical phase trials and get approved. This run up on the stock price today has nothing to do with the fundamentals, but fear of missing out, which I call FOMO, kicking into the stock for the short-term speculative investors. Now, for short-term speculative investors, I feel that in the short term, this stock could reach, $5 a share. I don't know. It's kind of losing steam right now, going from, $3.60 all the way down below $3 right now. But once again, after the hype is over, it will crash back down from imagination land back to reality land. And if you look at the historical performance of the stock, it's done the same thing a year ago. So any future news on fundamentals is what I would look at for serious long-term growth investors out there. Since 75% of the shares are owned by the general public, this will be a highly volatile stock in the future on any sort of news, good or bad, in the future, and the volatility swings will be massive. So short-term investors out there, if you want to, when it comes back down, you want to hold it for another good news article, it definitely will have another massive swing again. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks, ciao.